Hi everyone, it's Angus here. I've been asked by a couple of people about this SuperTrail indicator that I use. It's a custom indicator that I've had made for me where instead it's based very much on a SuperTrend indicator. If you want to find out a bit more about similar indicator, have a look at the SuperTrend indicator. And what it basically does, it helps me find what I call the natural range of a stock. Like it's effectively looking at the ATR of a stock over a period of time, the average true range. But what I've done is I've tweaked the SuperTrend indicator and I've made it use a percentage value. So because it uses a percentage value, it then allows me to use it as a trailing stop. And the way that it works is if I pick a particular stock, and in this case I've got DocuSign, I can look at DocuSign and I can when I enter the trade, I can then work out at what sort of stop loss level, especially a trailing stop loss level, do I want to set my stop to protect my downside. So you can see here at the moment the SuperTrail is set to 30, which is 30%, which is a really, really wide stop loss. You can see it's 30%. It takes the wicks into account. It shows the buy and sell labels. They're obviously just an indicator to let you know if the stock's, I guess, in more of an uptrend than a downtrend. And the cloud just sort of gives you this, sort of shaded green area. So if I untick that, you can see the cloud disappears. If I untick that, you can see the buy and sell disappears. And if I untick the take wicks into account, it gets rid of any of those sort of long, unusual candles. But the best way to use it, in my opinion, is to have these all turned on. So at the moment, I can see that if I bought, or if I had bought DocuSign around about start of January this year, if I move that across a bit, where it sort of tells me where I should buy it, I can see that for a 30% trail, I would have had roughly about a 260% gain on that stock since the SuperTrend, or since the indicator told me to start looking at this particular stock. And if I thought 30%'s way too high, I don't want to risk 30%. And let's say I buy this stock and I've only just bought it somewhere around here, or even if I buy it here, like let's pretend I'm going to buy it today, and today it's a little bit of a down day, like it looks like it's gone backwards a little bit, but I think maybe it's had a bit of a pullback, so I might have a look at it. The RSI is a little bit lower. If I double click on my SuperTrail, what I can do is I can start to decrease it, and I like to have a trail somewhere between 10 and 15%. Like I like stocks with less volatility. And so you can see, if I go back up, in fact, so you can see how the buy and sell signals are starting to kick in. So in theory, I probably wouldn't really have wanted to hold the stock through here. Like it spent 6 months doing nothing, and then it certainly dipped there. But you can start to see at 28%, some of the signals are kicking in. And so what I want to do is I'm going to look at this last period of time here, and I want to work out, because this is all the COVID-19, craziness. And so what I want to do is I want to try and get down to a level where I could have bought it somewhere around here, and I would have kept the trade just after that sort of crazy market volatility. So let me zoom in a bit so you can see it a bit better. And so I just double click on it to use it again. And so you can see how there's some of these long wicks that would normally stop you out if you didn't take those into account. So at 15%, I've still kept my trade. At 14%, I've still kept my trade. And you can see at 13%, I get kicked out. So what I'll do is I'm basically, in my head, I'm saying 14% looks about right. So if I click OK, and if I head across here, what I'd do is, if the timing was right, I'd look to buy this stock. And then what I'd do is I basically say, in my trading program, I use interactive brokers. I'd say, let's set a 14% trailing sell. Oh, caps. Trailing sell. And so then I'd put that in, and I'd say, well, this is roughly about what I consider the natural range for this particular stock. So if I wanted to sort of get through this bit of volatility here, just to see if if I made it a little bit wider, what would happen. And so I have to be 15, 16, 17, 18, 19, 20. So I'd have to go from 14% all the way up to 20% to take into account that bit of volatility there. And I don't want to do that. I'd much prefer to have it down around 14%. And so the whole idea of what I'm trying to do is buy a stock that's trending. It's in one of these good, fairly long-term momentum uptrends. And what I'm trying to do is find out what the natural range of that stock is and then buy it. And so, put my trailing sell at around 14%. And so that way I'll stay in that trade while it's behaving normally. And if it does something unusual, like if it, for whatever reason, the stock decides to take a dive, and it, passes back through that, 14% trail, then I get out. So, I've managed to, if I move this over here and say, if I bought it, let's pretend around that period there somewhere, then it's saying that, for 14% trail, I could have made roughly about 80% on that particular stock. And at this stage, maybe it's going through a consolidation period. It might still keep going up. But if the worst happened and it did go down, then I know that about 14% is where I want to trade it. And it could even be tighter than that. But, these sort of little fake wicks, where people have either gone stop hunting or there's been some sort of news. If I didn't take those into account, if I turned that off, let's see what it might be otherwise. So 14, 13, still green, 12, 10, 9, 8, 7, 6, 5. And so you can see I could have held this stock all the way down to around about a 6% trail if I didn't take those wicks into account. But, I obviously would have been stopped out there, and I would have been stopped out there unless I was, purely setting my stops manually and, trading at the end of the day based on where the share price ended up. So I'm much happy with this 14% stop. I'm not quite sure using the video if I can switch shares, so I'll try it anyway. But let's have a look at a long-term favorite like Visa. And so if I zoom out on Visa, let's go to, let's say, a 5-year chart. Let's even see, let's go all, see how far back I can go on Visa. So Visa is quite interesting. You can see here, if I go back to my SuperTrail, I turn on my wicks. Let's see what I would have needed to have kept Visa for a much longer period of time. So you can see that Visa's up roughly 1100% from when it first started trading. 17, 18, 19. You can see the volatility is coming out of it as I increase my stop losses. 20, 21, 24, 25, 26, 27, 28, 29, 30, 31, 32. Just want to get rid of that very first one. That's going to take 50%. It's crazy at the moment. Right, so you can see at 55 on a 55% trail in theory, Visa would have returned around about 1132. But that's ridiculous, because you're looking at the entire life of a share. So it's something more reasonable, like let's say around 20%. You can see that I would have probably held it somewhere around here when it was starting to move up a little bit, and then you can see that it sort of ran, I don't know, from 2011 to 2015 was the first time I would have got stopped out, around about there. I would have re-entered very shortly afterwards. This is now monthly timeline, but then you can see that again I would have held it all the way through here, and only gotten out at the the last sort of financial crisis caused by the COVID. So it's a really interesting indicator. It works on any time frame. So if I wanted to say put on a 15-minute time frame and zoom right in, and let's say make that, I don't know, 6%, because Visa's not particularly volatile. And so you can see here, I would have got stopped out through there at 6%. Would have got stopped out there. So let's pretend I wanted to hold it, the stock for say 3 months. And look at the volatility over that 3-month period. So let's see what percentage trail I would have needed. So 8% would have kept me through this period here. So you can see 12%, that's not bad. So if I bought it somewhere around about here, where the, sort of telling me to buy it, a 12% trail would have kept me in for around about a 41% run. And again, we're still in this sort of crazy period where the stock market's wandering all over the place, as everyone knows. So that's just a quick look at the TradingView indicator that I use, this SuperTrail indicator. It's a indicator that I had to pay for, so I'll have it as a premium indicator that if anyone would like to buy it, they're more than welcome. And all the pricing is in the the details below, or depending where this video ends up, it's either on the YouTube description, or it's on the TradingView description, the link in the description. Anyway, I hope that was worthwhile, and I said a couple of people have been asking about it. The only thing that I'd add, though, is it's meant to be like an indication. It's sort of trying to help you with your trades. It's not going to be 100% accurate. It just depends on where you set your trail, as to trying to give you a bit of a guide as to where you should set your stop losses. But then what I do is I use something like the OBV for confirmation. So I want to try and make sure that if I'm entering a trade, the OBVs, which is just basically a battle between the buyers and sellers. If I've got a moving average on the OBV line, so if the OBV is above the moving average, then it means that in theory buyers are a bit more in control. And if it's below, then it means sellers are in control. You can see it dip down here, so sellers are in control, dip back above here, buyers are back in control, and then it's sort of been fairly neutral and the stock hasn't really moved a whole lot. So something like an OBV just helps give you better confirmation as to how it's going. And then something like an RSI might tell you if a stock is at good value or not. Again, depending on what you trade, but for my purposes, I just really like using this indicator to work out roughly where to set my stop losses, and somewhere between that sort of 12 and 15% is probably about right for most stocks. Again, depending on how long you want to hold them for. If you want to hold them for a very long time, you might make that 30%. If you want to hold them for a very short period of time, you might choose to make it around that sort of 8% type mark. But anyway, if you have any questions, let me know. Thank you very much.